All right. I don't know if anyone could hear me beforehand, but if so, I'll just kind of start over. So, we'll take a look at the NASDAQ futures here, or excuse me, the NASDAQ cash. And let's see here. We are currently at 65.56. So we're just below this 100% extension. So from the low to the high to the low here, projected 100% of that swing. And we find ourselves just currently right below that. Now we are right above the 34 EMA, and this is sort of what I was looking at today. Is we had this really big cluster of resistance here, and after really a nice couple of days up, I was looking for basically this resistance to hold, and over the next couple of days sell off. Now, if you're with me this morning for the opening session, um, one I was looking at was Facebook and Netflix. So with Facebook, it's really just playing against, the Nasdaq there. So the idea is that if the Nasdaq is, at resistance and ready for a pullback, what would move with it pretty quickly, and Facebook being one, along with Netflix. Now we are just slightly above where I'd like this to close. I did establish a short position in Facebook, so I shorted with a call credit spread. So I sold calls and then bought one as protection. And I also did the same thing in Netflix. So let's look at Netflix really quick. So Netflix, same idea is that with it having a huge move up. So since last Friday, I was up something like 10%, and yesterday was up like 6%. Today we're at 1.5%. So what I would really like to see is this close below 318.09. So it would have to come back a bit here in the next 25 minutes or so. But as a whole, so let's go back to the indexes. So we didn't really look at the Russell, and I don't typically look at the Russell much, but it is basically like the Nasdaq, where it's butted up right against resistance, and this is sort of a battle of who wants it more at this point. Are the bulls going to continue? And right now, it's sort of looking like they might, just with the action we're seeing right now. It looks like, at least with the Russell, it's going out on its highs at the moment. And if we go back to the Nasdaq, same thing here. Now this is a really short time frame. This is a 15-minute, or excuse me, 5-minute chart, and we do have a squeeze developing here where the momentum has shifted higher. But we're still below the high on the day, which was 65.74, and still below this 100% level that we looked at just a moment ago. So with just 25 minutes or so to go, let's just kind of run through a few different things here and see if there's any other trades that we might want to set up into the close. Yandex, haven't looked at this thing in a long time. So, I mean, a lot of the charts look very similar right now just because they basically sold everything in December. So there wasn't really, strong sectors or weak sectors. It was throw everything out. And so a lot of the charts look, very similar at the moment. So one thing let's look at actually. So this is usually a pretty good indicator of, direction for the market, the Dow Jones Industrial Average, so, or index rather, and it basically is following um, pretty closely what the pattern here that we saw with um, the S&P or the Nasdaq, where it looks like it still has a little ways to go before it finds resistance. So just butting up against the 34. But if we run So we have cleared that. So that does sort of open the door there for a move higher still. Let's look at a few other things here. Let's look at oil. Oil is right into resistance now, right at $50. Now you do have this squeeze setting up here on a 195-minute chart. Momentum has shifted higher, but to me, this looks like something to where I would expect a pullback, probably not a huge one if this, if it's going to stay bullish. You've got kind of a cup where you'd have the handle forming here for, maybe eventually a move higher. But, oil did get hammered so bad that it wouldn't be out of the question. Like I said, maybe I think I talked a little bit about this this morning, but $55 is definitely not out of the question for oil. Now you could play that with something like USO. That's the ETF for oil, or probably the most popular ETF for oil, or something like an oil stock. This morning we looked at XOM or ExxonMobil just briefly. But most oil stocks look like there's room to run, just to get back to the 34 with Exxon. But generally speaking, I like to initiate positions, with something like a squeeze. So XLU, I believe this is the utilities ETF, and it looks pretty bullish here. You can see there's a squeeze starting to fire on a 39 and on a 78 and kind of across the board. So let's just kind of take a look at this because I would like to have some sort of bullish exposure with my short exposure on Netflix and Facebook. Now, something to consider just while I'm thinking about it is Netflix reports earnings, I believe, next Thursday. So is it Thursday? I'll have to double check, but it reports earnings pretty soon. And earnings is really a crapshoot. You can have great numbers from a fundamental standpoint and get hammered, and then the opposite where there's no reason the company should be going higher, but from a fundamental standpoint, but it just continues to. So I don't really like trading earnings. To be honest, I will every once in a while, but to me, it's just, especially around earnings. Now I'll do things like, there's just kind of a well-known phenomenon, or at least should be a well-known phenomenon for options traders, is that getting closer to earnings, implied volatility will increase. So if you kind of catch it when it's, the idea is that you're looking for a play, with increased volatility. So that's the kind of stuff I'd like to do around earnings. But, on the day, every day before, day after, that kind of thing, I don't really do much. Maybe the day after where volatility usually gets crushed and, sometimes can provide a good opportunity to actually buy options. So let's just, continue to look here at XLU. You could really just say you've got a pretty quick move, or what would be a pretty small move to 53.24. So this is definitely one that looks pretty interesting here to me. So squeeze is firing, looking to fire long there on the 78, and then from a 4-hour chart. Now I don't really trade this ETF, or I don't know that I ever have, and I don't know if there's any sort of seasonality to utilities. I mean, I know like natural gas typically does better in the winter, sort of for obvious reasons. But from a weekly perspective, this thing did close below the 34 last week, and it looks like it's trying to make some sort of an effort to get back above it. But typically, the way I look at this is with the close below that, you're going to see bearish action. In a close above, you'll see bullish. So let's keep that one on kind of the maybe list. I do like that, at least for a short term kind of move, but it would not be one where we'd hold on for very long. Maybe just something like a day or two. All right, so just making a note there. How are these things sorted? There we go. So a lot of these you can see there's sort of mixed signals where momentum on some of the shorter term time frames look to be starting to signal lower, where some of the longer time frames are signaling otherwise, or vice versa on some. So I just think that right now there's in my opinion, today was a day where I know we'd be butting up against resistance, and now really the question is are we going to stay, below that, or is it going to make a move into the close to get above that? And will the kind of bull rally return or resume rather? So Comcast is one that was really strong kind of going into the end of the year. They have good fundamentals, but like really just a lot of stuff, despite the fact that they had good earnings and things like that, it just got hammered. Now, that was the argument I heard from a lot of people about just, why this sell-off didn't make a lot of sense. But to me, it was so overdue that we never really got any kind of decent correction over the last year or two. And so it kind of all happened at once. Now, obviously, there's concern with increasing debt. That's something that I always point out and kind of harp on is that, debt has gotten out of control. I'm, relatively young. I'm in my early 30s, and I just know so many people that, got 4-year degrees and have, 25, 30,000 plus dollars in debt. And I read something recently saying that it takes something like 25 plus years, I believe, for your college tuition to finally pay off. So, I mean, that's just absurd to me that you have tons of people, we have more college graduates than ever before, but, we have this now new type of struggle that, most people are going through, which is just massive amounts of debt. Because if you get out of college and, you're ready to buy a new car or even a used car, that's another even for a decent used car, you're looking at something between 15 and 20, 25,000, where the average new car is probably closer to 25 plus 30,000. But point being is just I think that we had all this hope that from the recent election, the market drove higher, and you got all sorts of optimism, at least in the business sector. And I think that basically carried into um, just day-to-day people. People are willing to put on more debt because they're hearing news of a strong economy and strong jobs and things like that. Where wage growth is, I think, something that's overlooked a lot of times, where you may have more jobs, but if they're shitty jobs, it doesn't really matter, or at least shitty paying jobs. But anyway, I'm kind of going all over the place, but my point is that this is why I don't have, longer term hope in, the resume of a bull market. Because we have some of our biggest names like Apple and Microsoft and Amazon and all these companies that had these huge runs since the last crash, the 2008 2009, and they've just become, in my opinion, so overvalued, that there's just it's hard for um, for a money manager or anyone like that, the big money in the market, to come in and say, we think Apple's going to double. You're just not going to double $1 trillion company. So I just definitely think this was well overdue. And now it's a question of, are we going to get a bigger bounce here before selling resumes? And that's kind of how I'm looking at this, is that it's either a point where, we're still oversold and we're going to need a bigger rally, um, before I think inevitable selling comes back. And I tend to, look at things as, how can big money punish the most people? Um, and right now, I mean, I think we are definitely in an oversold position still on a lot of stocks, like Apple. Apple, off its high. let's see. So Apple's significantly down from its all-time high. So I mean, that could be something to really think about here. Is if you go from where we at 150.90 to 190.03. I mean, that's a 50% retracement, and you're still really in. You could consider it, still a downtrend. So that's really ultimately, I think, maybe the question here right now is, have we reached a point to where even with a massive rally, we're still bearish? And have we actually seen the bottom now? Now, Apple is one where I think longer term they're going to be okay. Where things like I said, Facebook and Netflix, I think there's a lot more cause for concern on these two longer term. Netflix has debt issues where they're going to need significant growth to sustain sort of their model, and I think there's a lot of speculation that they may find um, they may find someone to buy them at some point. I know Apple was a big that was a big discussion for a long time, is that Apple would be a potential buyer of Netflix, which really I've read a lot of things saying that probably would never happen. They probably could create their own thing. And Disney's coming out with their own streaming service. So there's just a lot of new competition. And Netflix has definitely got a good brand name, but, as we've seen, for years and years, first to market doesn't always survive. So with about 11 minutes to go, let's just kind of go back through a few things here. So, bonds is another good indication of, are we entering, serious, kind of bear market recession territory? And right now you can see, with the rally, bonds has sold off, and that correlation is, pretty long standing where, if equities are strong, bonds are weak and vice versa. So bonds and the metals are typically sort of flight to quality products. And over the month of December, you saw gold and silver have, relatively speaking, big moves. I mean, I think for silver it was up something like 5% over the month of December, and it's taking a breather here now. So if we look at this from a weekly perspective, it it did go parabolic there basically on a daily chart. And you can see here a weekly squeeze has started to fire now. Yeah, so I mean, our first area of resistance from this high to low, now this goes back as far as July 2016. That was, from this swing, the previous high. And so just to get to a basically, just shy of 40% retracement of that move, that's at 1667. So, I mean, still a lot of upside potential here. If we get continued consolidation here, probably see somewhat of a flag pattern develop. And really, I mean, it'll go the way of the rest of the market. So if equities continue to rally, this will probably continue to sell off. Where if equities start to sell off, the metal rally will resume. Now, one I looked at this morning was Newmont Mining. This is one that's come up quite a few times on different scans. And you can see, as I mentioned with the rest of the metals market, this one had a nice rally in December and kind of leading up to that. And right now is, kind of taking a breather with the equities rallying, but there is a squeeze on weekly, daily, and 195 and 78. So this is actually one I may actually get long here. You can see momentum has shifted. Let's go ahead and set up a trade on this one. So let's look at IV. So it's actually about half of what the volatility's been next week. So buy something like the 32.5 calls on this. being so small, there's not going to be a lot of, it's not really ideal to do like a selling a spread on something like this. So, okay, so I'm going to go ahead and buy the 32 and a half February 8 calls. So it gives me 31 days. Um, and this is, a bullish play on basically the metals market. Okay, so, you know, basically the way that this works is, the idea is that we're going to hold this 34 EMA that we have throughout this sort of rally. Right now momentum on this squeeze is showing bearish momentum, but I think that will reverse because, like I said, right now I'm positioned for the indexes and tech to go ahead and start kind of pulling back here after a nice couple days of upward momentum, or really you could say just a bounce. It's really, we're not at the point yet whether we know if this is going to be sustained. But anyway, so I'm basically just building on that same idea that we're going to see weakness in equities and then a resume rally in things like the metals markets. So got about 6 minutes left. Let's just jump back over here to um, 5-minute chart actually on the NASDAQ. So I actually like this that we didn't, retest the high here. I mean, it just makes me think that we will see a pullback tomorrow. And I'm positioned pretty short term with Netflix and Facebook. On Netflix, I believe I have 17 days or something like that. In Facebook, I have 10. So let's see here. Now, I don't love the fact that, Netflix has gone out on its highs here, but you can see here from a 39, you do have somewhat of, maybe I'm just getting, yeah, not really. It kind of looked like a bit of a head and shoulders here, but I did a spread with this. So, I mean, if it looks like this is going to, retest or move towards 327, which is kind of the next area of resistance, I should be, I'm not going to take a ton of heat here. Now, Facebook, yeah, it's finishing pretty strong too. So, a pretty interesting close. Like I said, I was definitely expecting things to kind of weaken towards the end of the day, but right now everything is positioned, for a continuation tomorrow. So, silver, we didn't actually look at gold. So, well, so I mean, we'll basically really just see. I'm positioned right now for a pullback in tech and bullish the metals market. Now, I do have a lot of time with the trade, so just kind of a quick recap. So in Newmont Mining or NEM, bought the, what did I even get? The 32 and a half. So those are the Delta 70 calls. And just to kind of look at this from the daily perspective, you can see how well it's held the 34 EMA. And once again today, it's held that pretty well. So, be looking basically for a test of 35.56. and these squeezes to start firing long. Take a look at the ticks really quick. So the ticks are basically just a measurement of buying and selling in the markets. You can see today it opened, with really high tick readings, but for the most part, well, actually, there's been some thousand tick readings, and anymore that seems about average. But um, right now, I mean, we have pretty consolidated, nothing too, one direction. Let's take a look at the VIX really quick. So volatility is kind of collapsing here, which is kind of interesting. It's been just so volatile over the last, month. You're seeing volatility is starting to slow down here. So typically volatility is kind of looked at as like a fear index. So the higher the volatility, the more selling you typically see. So with volatility moving lower, that traditionally speaking would bode well for, bullish activity in stocks. So less than a minute, 10 seconds to go. And looks like, all right, so can't 65.51 is where we closed here on the NASDAQ. So just shy, or excuse me, just below this 100% extension. Now it did close just above the 34 EMA. So, kind of a mixed signal here. We did see a loss of momentum here with the blue candle. Um, so it should be an interesting day for me tomorrow. I'm basically positioned right now for um, a pullback in tech. So short Netflix and short Facebook with call spreads, and I am long calls in NEM. So I'm long basically metals. So that's really all I've got for today. Thank you for joining me, and have a good rest of your day. Take care.